Recent real estate stats are proving to be dreadful. Could we see the 5-year fixed rate hit the high threes? Population growth may have peaked in Canada, and bike lanes continue to be in the news in Toronto. We're going to talk about all this and more on this episode of the podcast. I want to welcome back all the listeners and followers of Owl Mortgage YouTube channel, the podcast, and Spotify channel. Thank you so much for tuning in. Thanks for all your support. So we have TREB's July numbers that have come out, and they're absolutely atrocious, folks. You know, there's a lot of realtors out there spinning this as, oh, it's encouraging, we're seeing stuff. It's absolutely terrible. July sales came in at about 5,391. This is down 13.1% from June. Year-to-date sales are about 36,500, down 17.1% over last year's 44,000 figure. The monthly average is about 5,218 throughout this year. That's the first 7 months of the year. And quite frankly, this is absolutely dismal. Looking back in 2021, there were 121,000 plus sales for about over 10,100 units per month. We're at about half that right now. And this is not looking good. Listings are up, and there's a lot of choice out there for buyers. There's a lot of opportunity to get some good deals for those that can afford it. And there is a bit of news on the horizon that I think borrowers are really going to like. So as we know, the Bank of Canada has dropped the overnight lending rate twice this month for a total of 50 basis points. We had 2 quarter-point decreases, and that would represent about $500 in interest savings a year per $100,000 borrowed. So if you have a $500,000 mortgage and you're in a variable product, or you have a line of credit carrying that type of balance, you could save as much as $2,500 per year in interest costs, or about $245 a month, which is good news. Now, I'm going to admit that in the past, back in December, January, I thought we would be probably only seeing 2 decreases or less in 2024. And I did predict that we'd probably be closer to 5% on the overnight rate than 4%. We're already at 4.5%, which is good. And I do suspect with the softening of data, labor data soft, businesses are failing, delinquencies are up, we got bankruptcies and proposals for small business spiking considerably, and we're seeing inflation under control because of how the CPI baskets have been amended to pull out less weighting to the mortgage component. We now have the CPI inflation number at the target rate for core inflation. So this is all good news. And as we see labor numbers starting to soften, we're going to see some more numbers coming out in the next week or so, we can expect further decreases to the overnight lending rate by the Bank of Canada throughout the rest of this year. And I wouldn't be surprised if at one of those meetings, it could be a 50 basis point drop. So, you know, hey, I'm not perfect, but we do start seeing signs of recessionary activity. The construction industry has already lost 6% of its labor force. And that hasn't been seen since the last recession. And the construction industry as a whole represents about 8% of all jobs in Canada. So that's a big segment that's seen quite a bit of decrease. Most of the jobs that are being filled are primarily government jobs. They're public service jobs. The private sector is just not seeing the activity and the growth that we should see. And you know, a lot of folks are resorting to self-employment because they're just trying to go at it on their own. So this job number, this unemployment rate, is going to start rising. It's risen rapidly in such a short period of time. Bank of Canada has expressed concern over that, And that's probably going to lead to more layoffs coming soon. We're going to see this number creep up, and that is going to be the biggest problem we're going to be facing as an economy. So we should be conscious of where that ends up, because it's going to cause some major problems economically with our economy. And as much as this government continues to cheerlead this GDP growth, the amount of people that have come into this country is alarming. And on a per capita basis, the GDP growth has decreased considerably. So on that front, has population growth peaked in Canada? Recent reports as of Q2, we hit 1.3 million folks added to the population number year over year. The non-permanent resident number cohort represents the biggest chunk at 830,000. These are mostly renters. And, this doesn't include, asylum seekers and stuff like that. But let's talk about how many NPRs are in Canada. Right now, numbers show that we're running at about 2.7 to 2.8 million people that are non-permanent residents. And I'm going to give you a glimpse as to what that is made up of, okay? So we got work permits. Work permits, the number sits at 1.323 million people, okay? Then you have study permits. They're sitting at 654,000 change, okay? And then there's another cohort that includes work and study permits sitting at 344,900. There's asylum claimants sitting at 363,000, and then there's other that represents about 100,000. This does not include about 750,000 to 1 million people that have expired visas and shouldn't even be here. This is a figure that was mentioned by Benjamin Tal of CIBC a few months back. I think it was earlier in the year, when he mentioned that there could be as much as 750,000 people that have expiring visas that are still in the country, and there's nobody looking for them. Like, we don't have an ICE in Canada like they do in the States that could track down people with expired visas and deport them. Like, we just have Canada Border Services Agency. They just ask you whether you got cheese or meat when you're coming into the country. That's about it. They're not really looking for that. So unless we start deporting these folks, these are also people that are here in the country taking up rental units, taking up space. And as everybody knows, we got a housing crisis. There's not enough homes, a lot of homeless, a lot of folks on food banks. It's difficult, okay? And I do believe that this 1.3 million people that have had the population grow in the last year is probably peaked. We do have an indication from the government that they want to reduce this number of non-permanent residents or this cohort from 7%. It's almost about 7% of our total population. They want to reduce that down to 5% in the next 3 years. The Bank of Canada doubts that the government will do that, but we have already seen some early indication that some foreign students from India, that number's dropped considerably because of the political mess that Canada and India have been involved in, this arguing back and forth as to whether India was involved in killing of the gentleman out in Surrey or not. But there's a political battle brewing between the two countries that's limited and reduced the number of student applicants already. So the number of new applications and extensions has already gone down. And there's an economist that I follow, Ben Robideau. He indicates that we may have peaked, and we may in fact start seeing that number drop, and could lead us to a reduction of this cohort being less than that 7% figure, down to 5% over the next little while. So we'll keep an eye on that and see what happens. But the rental market is still pretty strong. I do believe that we have hit peak intensity in that front. I still think we're going to, maintain the level of rent values, but we're not going to see the spikes of 7-8% year over year anymore. I think it's going to taper off. We got more rental units coming on the market. We started seeing that in June and July. So, we're going to start seeing some normalcy on the rental front. And with less folks coming into the country, it might normalize and might settle down, but still, we are going to see a shortage of single family units being built. The condos are, new developments are put on hold. I think that's going to taper off, although we do have projects that are going to be scheduled to close in 2025, 2026, going to taper off in 27. We're going to see a big shortage in 2028 as new sales have pretty much come to a standstill, the lowest levels recorded over the last little while. So it's going to be interesting to see how the next 2-3 years play out in the condo market, but there could be some opportunity. But folks, we are seeing a number of clients that are coming in looking to get refinanced, looking to deal with their renewals. There are quite a few folks dealing with payment shock at time of renewal. The good thing is we are seeing some fixed rates move lower, not quick enough, but we are starting to see signs that we are going to get some relief on the fixed rate front. As far as the speed and when it happens, we don't know, but we ask people to be patient. We have a lot of folks being contacted by banks in advance of their mortgage renewal offering these rates for 24, 48 hours. Do not, and I really stress this, do not jump at locking in. We've had folks that have been contacted by their bank 6 months in advance to lock in a rate, and the reality is they have a discounted rate. They're at 279, 299, and the bank's offering 479, 489. Why would you give up a rate almost 200 basis points less than what they're offering you to lock something in now when rates are moving lower? That bank is trying to take advantage of you, okay? They are not doing you any favors. So be patient. Use up that negotiated rate that you've got till the end of your term for the full term. Do not give it up, okay? And it's unbelievable when people call and say, Vince, you think this is a good rate to lock in? But you're maturing in fucking January. Why would you give it up? Like, why would you pay an extra, couple grand in interest when you don't need to? Like, it goes to their bottom line. And rates are moving down. So you're going to get a better rate come maturity. So folks, be patient. Give our office a call. We'll walk you through it. We'll help you get a better deal with your existing lender if we can. We don't necessarily have to transfer, but we could give you tips and strategies to negotiate a better rate. And we'll look after you. So if you have an upcoming renewal, please give us a call. We'd be happy to help out. On to a topic that has been making the news a lot, and that's bike lanes in the city of Toronto. So recently there was a cyclist that was killed because they veered off into traffic because of a dumpster that was parked in a dedicated bike lane. I believe it was in the Bloor Avenue Road area. And that company that left the dumpster there is come under fire, and they have been levied a bylaw fine of $1,000. And cyclists across the city and the country are up in arms because they feel that this is a pittance when this company probably had a lot more to do with it. Now, I'm going to come under a lot of fire over this topic, but over the last 6 months, I've seen cyclists that don't obey traffic lights, stop signs. They are not necessarily following the rules of the road. And I'm not sure if we have all the facts to this particular incident. Now, if you have a dumpster that is in a bike lane, I don't think it would be very smart to veer into traffic. Okay, there's a dedicated bike lane there. Anybody driving a vehicle is not really looking for cyclists because they're driving next to a dedicated bike lane. We don't know if this person stopped, got off the bike, moved over to the sidewalk, went around the dumpster. We don't know all the facts. So trying to lay blame on just the car driver and the person that left the dumpster there, I believe is a little bit premature. And I think we have to step back and really think about how these things should be assessed and investigated and provided full due diligence on fully figuring out what exactly happened. I'm not laying blame on anybody, but obviously this is an accident. Yes, there is a dumpster in the bike lane, but why is it there? Why? What's under construction? What permits were issued for building? How do folks think things are going to get built or debris taken away if something has to be built and there's permits in place for it? So, like, we got to figure out exactly what happened. But I caution, I urge all cyclists, be safe. Follow the rules of the road. I've seen too many cyclists, when I'm at a red light, just fly through red lights and stop signs without even taking a look in either side. Like, you're putting yourself in danger. And the reality is, cars are dangerous. If you go to war with a vehicle and you're on a bike, physics tells you that the car is going to win. So be safe out there. Be aware of what's going on. And, we've had so many new Canadians coming into this country that I'm not too sure they're the greatest of drivers. Now, I'm not trying to pick on anybody per se, but there's a lot of people that have a lot of disregard for rules, speeding, improper lane changes. I'm just talking as a driver. What I see on the road is very concerning and alarming. There's not enough enforcement over this stuff. And the reality is you got all these cyclists that think that they're protected with these bike lanes. You still have to be aware of trucks turning, of oncoming traffic, of making sure you're doing what you can do to stay safe. And I'm seeing cyclists going the wrong way on bike lanes and getting into little incidents with oncoming cyclists. So understand the rules of the road, understand what your proper protocols are to stay safe. Like, it's getting ridiculous. But in any event, I don't mean to ramble. And for those folks that are struggling with budgeting, I've been getting a lot of great feedback on one of the tips I gave out a few weeks ago, and that is to cancel your credit card. Contact your credit card company, tell them you lost your card. They'll issue you a new one with a new code, new number, and you could then determine which subscriptions and automated payments you want to continue, because some of these companies are hard to find. You lost their passwords. You don't know how to get into the portal to cancel. It's a lot of work. Let them contact you to re-engage your account and start charging it again. So this has become quite a positive tip that a lot of folks are using. Focus on what you need. Get rid of your wants, okay, and start budgeting, because the next 12 to 18 months is going to be bumpy. So we want everybody to tighten the chin strap on your helmets, because it's going to be a little bit bumpy. We want you to get through it as these rates come down to more normal levels, and you could withstand this tough, stormy financial crisis we're going to be dealing with as these rates settle in. Remember, when rates come down, they're coming down because the economy is not doing well. So, layoffs are coming. People are going to be under stress on cash flow. We want to make sure they're budgeting properly. So print up your bank statements the last 6 months, print up your credit card statements the last 6 months, and look at exactly what you're spending money on, so you could take advantage of what you could save, what you could get rid of what those unwanted things, and really dive into and drill down into what you're spending every dollar on, so you could try to save a few $100, $300, okay? So the interest rate decreases so far by the Bank of Canada amount to 50 basis points. If you're in a variable rate mortgage or you're in a line of credit, you've seen that decrease. That's $500 in savings per $100,000 owed on revolving credit that you've already realized some savings with these decreases. Hopefully there's more, and there's more savings to come to help everybody get through this. But all in all, we're here to help. We're here to give you some insight. And for those folks that just need a checkup and want an update on what's going on, hey, we're a phone call away, we're a DM away, an email, reach out. We're happy to help. And we're hoping to get you through this summer and get well prepared for the fall and into the next 12 to 18 months, as I pointed out. On that note, I'll leave you all, and I want you to enjoy the rest of the summer. Enjoy the weather, and be safe out there. Take care.